7:03 right now, and the financial world is reeling this morning after taking a beating yesterday. The day started with troubled news of investment banker Lehman Brothers filing for Chapter 11, and the market quickly spiraled downward.
And then more bad news from AIG and Merrill Lynch would send the Dow Jones 500 points lower. But how do we get to this point?
Well, let's take a look back, because it actually all started in February of 2007. HSBC warned that it was losing money in subprime loans and more homeowners were not making their payments. Now, this would be the first time the word subprime would be used. It's mostly dismissed by investors. Fast forward to April 2007. This time it's leading subprime lender New Century Financial. And the bank suddenly stops taking new loans and lays off about 3,000 employees. By the end of the month, New Century is bankrupt, and subprime mortgages are now starting to get a lot of attention.
Two hedge funds run by Bear Stearns report losses. Meantime, Merrill Lynch warns it's losing money in the subprime market. Worry spreads throughout Wall Street. The Federal Reserve begins to take notice of Wall Street's panic. Throughout the month, the Fed cuts interest rates 7 times and implements an emergency loan plan to bail out troubled banks. 2008 will go down as the year of failures and takeovers. It starts in March when J.P. Morgan Chase says it will buy out the struggling Bear Stearns. July brings the demise of IndyMac, which is taken over by the FDIC. That, of course, was followed by the taxpayer-funded propping up of Fannie Mae and Freddie Mac, which now brings us to September 16, 2008. AIG, Merrill Lynch, Lehman Brothers, all in turmoil, and they're either being sold or going away, sending the Dow down 500 points.